Hi, I'm Roger Aguinaldo, and welcome to the M&A Advisor podcast. Since 1998, the M&A Advisor has been the definitive source dedicated to recognizing achievement, delivering unrivaled thought leadership, and connecting the world's mergers and acquisitions elite. We help you sharpen your edge and accelerate your success in deal making. Whether you're an ambitious new player or a market veteran, this podcast provides masterclass strategies, unvarnished stories, and vital lessons from the industry's influential figures. Before we launch into this episode, be sure to follow us on YouTube, Apple Podcasts, and Spotify, and subscribe to our essential M&A Alerts email newsletter. Find all the links below. Your engagement fuels the deal-making community. Now let's get into the transaction. Today on the podcast, we're speaking with a leader who spent decades helping middle market businesses grow, thrive, and navigate complex deals. Brent Baxter is the Chief Executive Officer of the Association for Corporate Growth, ACG, the premier association for middle market mergers and acquisitions. But Brent's impact goes far beyond his titles. He's shaped ACG programs, led chapters, and connected deal makers across the United States and abroad, earning a Lifetime Achievement Award in 2023 for his direction. He also leads up GF Data, the data intelligence arm of ACG, which was founded in 2006 by seasoned deal professionals. And GF Data has become a trusted authority in middle market intelligence, delivering exclusive, reliable valuation insights on private equity-sponsored transactions to a highly curated subscriber community. It's with over 25 years of buy and sell side advisory experiences. He has closed more than 200 transactions totaling over $1 billion. He's also grown companies as the CEO, quadrupling sales over 8 years, and serves on multiple private company boards. And at ECG, Brent now leads initiatives that empower thousands of middle market professionals, from DealMax and Growth TV to the Middle Market Growth Conversations podcast, helping executives, investors, and dealmakers turn insights into action. Brent, I got to be on one of your podcasts. You've been a few of ours, so I'm waiting for my invitation there. But Brent brings vision, experience, and passion for growth. And today he's here to share what it takes to succeed in today's dynamic M&A landscape. Brent, welcome to the podcast. We're thrilled to have you.
Well, and I'm thrilled to be here. Thank you for having me. I appreciate it.
All right, let's get right into it. Middle market deal flow. Are we in a slowdown? How are the trends? Are we witnessing a structural reset of some sort?
Well, the short answer is I think things are swell. And what do I mean by that? Just in January, our communications group launched the annual Middle Market Outlook Report, which is some of a lot of data input as well as interviews with critical deal professionals around the country, survey data, and so forth. And I give credit to our senior editor and our VP of communications, Katie Maloney. In conversations with that deal-making community, there were a lot of water analogies. The dam's about to break, the tide about to rise, the floodgates are going to open. And her conclusion and what our data supported is just there's going to kind of be a swelling of the tide, if you will, a swelling of activity. And then we can play on that word and say our expectation is that 2026 will be swell. So I think that's the sentiment. The data supports that. We, of course, really happy and privileged to have a lot of tentacles in ACG. So we're in, conversations all the time with investment banks, corporates, private equity, and so forth. And one thing we are hearing anecdotally is the amount of pitch activity in the investment banking community is up really significantly. They're really getting busy in client acquisition and mandate acquisition, and that's certainly a very healthy sign.
So was that we're actually taping this podcast right maybe 5 days after U.S. Iran war began. What was the period in which sort of that data is taken? Was that
Yeah, that
end of
data, yeah, good question. The data was assembled through December and into January. So relatively recent, but not as recent as the most recent
yeah.
disruption in
Well,
macroeconomics
you're
globally.
always going to have disruptions. Do so all the deal closings, right? What precedes are all the activities of retainers, signups, all of these types of
Mhm.
auctions going on. So you do see a pickup in that, or the data is showing that.
Yeah, what we're hearing is that the investment banking community, writ large, is pitching lots of new clients or existing clients with new transactions, which means presumptively 3 to 6 months from now, more deals come to market.
Yeah, and is that because sort of maybe a number of these private equity firms and funds are kind of coming to the end of their vintage? Do you see a lot of the um, actions coming from that they need to that they need to find an exit, or where's all this activity really originating from? You think?
Yeah, I think it's a little bit of all of the above. So a couple of uh, you know questions under the question there. Certainly, I think most of the listeners here would be aware that private equity hold periods or inventory, if you will, is sort of at a record high. Approaching 6 average years of hold when
Yeah,
not all that long ago it was 4. So certainly, we hear, read, and see pressure from LPs for liquidity coming out of the PE funds. But there's also continues to be a significant amount of capital moving to private capital, whether it's private equity or debt funds or family offices, and so more capital is becoming available, which means more dry powder, which means more reach out to find transactions. So I think there's supply and demand, and when there's a lot of supply of capital, at some point demand catches up with it.
yeah,
Um, Certain sectors were clearly impacted last year. In particular, manufacturing acquisition transaction activity was down dramatically in middle market and otherwise. That relates primarily to tariff and regulatory uncertainty. That, although still uncertain, seems to reached a little more stability around the uncertainty, if I can
yeah,
put it that way.
yeah,
So, as manufacturing companies have held back for 1 year or 18 months to transact, I think some of those are coming to market. But the demand for other sectors where there is more certainty, or shall I say less uncertainty,
right,
companies are coming to market there because valuations are strong.
yeah.
So
Now it's
lots of
interesting that
factors
you
drive
say
it, I
that.
think. Yeah.
Well, it's interesting you say that, the whole period has increased on average by 50% from 4 years to
Yeah.
6 years. What what was due that? It's still capital still coming in, so there was not as much pressure for them to sell even at a sort of
Yeah,
an
well,
even
I think
valuation?
for if you go back, kind of 2 years, there was this certainty that interest rates were coming down. Nobody quite knew how much and how quickly. If you go back 2 years, I think the general mindset was that interest rates were going to come more down more quickly and more rapidly than they did. So if you're holding a company and you're looking to exit and you look over to the buyer side of that equation and say, boy, if I wait 6 or 9 months and interest rates are down by, half a point or more, and the cost of capital is becoming much, much more favorable for the buyer, I ought to wait because I'm going to get a higher multiple if the buyer financing costs are lower, if capital is more available. So I think there was a lot of caution around that. And then last year, you had the tariff uncertainties to that led to even more caution around exits.
Yeah.
But kind of, the one certainty is uncertainty. That might be the new normal. And I think that markets are pricing that accordingly, and sellers are coming to market, whether they're the privately held assets or the private equity held,
Yeah,
institutional
so
assets.
that's interesting that you say that, because now typically the owners of these private companies are funds, private equity funds, right? And
Often,
professional investors, right? More financial, even family offices versus family owned,
yeah,
entrepreneur owned businesses, right? So even if, and you've been doing this, for decades, right? Even at Nolan, right? You would still get activity because the owner could care less whether it's
yeah.
another year or 2 years. I got to retire, right? Or
Yeah, that's right. There are
I'm,
far more dynamics in a
yeah,
private owner sale.
yeah,
They're not monitoring multiples and cost of capital on a
right,
daily basis and trying to
yeah,
find the perfect inflection point.
right,
Uh, they often exit because of another dynamic,
right,
age, retirement,
yeah.
and so forth.
Death, right?
Yep.
Marriage,
Yeah.
or
All the
divorce.
above.
Right? There's all the life,
Taxes.
life, yeah, taxes,
Yeah,
right? Life conditions, right?
yeah,
And
exactly.
now that it's a lot of the middle market, lower mid market, in which ACG, contribute a lot of that, right? Over the last few decades, has become tremendously professionalized. And, I'm not saying good or bad, right? Because you
Mhm.
could, our parts of our industry are getting headlines of, closing hospitals and, doing real estate transactions
Yes,
and
the
all of that,
headline stuff.
which
Yeah.
those headlines, and look, we know the reality, right? The reality is 98 point whatever percent, and you could see the data from GF data are really helping these lower mid market, middle market companies,
Yeah,
out there.
the Ohio State has they call it I think it's the Center for the Middle Market, and they really follow middle market M&A activity. And this has been sort of a long-standing data point. They sort of look at the economy in three segments: small business, middle market, and large. Middle market being defined as roughly 10 million revenue to about $1 billion, and that would also sort of correlate with transaction size. So the middle market leads the economy in job creation. So it creates more jobs than the big guys or the little guys.
Yep.
But private equity owned middle market companies over index the middle market in terms of job creation,
Yeah.
which is sort of a great validation of your point, Roger. Middle market capital is largely seeking growth and not slash and burn and cut costs,
Right.
to hype up cash flow. Now, certainly, a big part of that growth is to make companies more efficient and so forth. But yeah, it's a pretty impressive and statistic the middle market should be really, really proud of. It is a
Yeah.
job creation use of private capital.
Yeah. So let's talk about the future. So job creation, but the future, it depends on who you talk about. And I know they're more than likely going to. You had a few sessions, maybe some people talking about last year's Deal Max, but this year, how AI, right? How software coding, all of that is, really accelerating not only of the the large corporations, but middle market and lower mid market deals, and sort of day to day small VC companies, right, are being
Yeah.
tremendously impacted. Do you see? I mean, in the numbers, in the types of deals, do you see how AI? And I'm not necessarily talking about okay, all us, you know, investors and deal makers are now going to be replaced by AI. But I'm saying, in the businesses themselves,
Yeah.
right? In the businesses themselves, is there a factor in there? Is that um, creating any activity or lack thereof?
Yeah, that's a great question, and I think it's still very early to pin down the exact effects that AI has on deal making, valuation, middle market. What I will say is that every fund that we talk to, every event we have, AI is a huge focus, and clearly the private equity, private debt, private investor community is really focused on what are the AI tools and techniques and methods that can help value creation and accelerate value creation. I'm not going to pay more for a company because it has the potential to become more efficient. But they are certainly going to look hard for companies where they can apply AI in the near term,
Yeah,
not the 2029, kind of framework that can improve customer service or efficiency or supply chain. And so it is clearly front and center of valuation thinking and value creation. The number of AI providers that we have as sponsors, as panelists, is increasing like leaps and bounds. And that's because our audience wants to connect with that audience. They
yeah,
want to understand it better.
yeah. I would presume that perhaps this could affect, or help shorten these hold periods, right? So if you can create value even more quickly and execute,
Sure. Yeah. Yeah.
that you'll be able to, you shorten it, you go back to 4, maybe down to
Yeah.
2,
Yeah, yeah, boy,
hold
that,
period,
that
right?
sounds like a lot of work.
Right?
I will, you pointed out and said earlier, sort of a 50% increase in the hold period from 4 to 6 years, which is absolutely correct. But I think a number of folks have pointed out that historically the norm for private equity was kind of 5 years ish. So there was a period of time when exits were just happening faster, probably because there were some dynamics around interest rates and economic growth. But getting from 6 back to 5 may not be as heavy a lift as it seems when you
Right.
contrast
Right.
it from 4 to 6.
Listen, I think AI, and now, remember, lower mid market and middle market to sort of mega and upper middle and mega, you're basically, your buyer, or who you're exiting to, is perhaps, a much larger private equity fund typically.
Yes. Yeah.
And then, unless, if you're really big, then the big corporation, right? Then the big
Sure.
corporation
Yeah.
would take you out. Do you see any change in dynamics there from sort of the upper middle to, because I mean, I think that's on the radar of many of these lower mid market and middle market firms. Like, well, what is the exit going to look like? What is the environment going to look like in the future?
There's certainly I don't know, I call it a stair stepping of lower middle market fund buying, being the first professional money in with the entrepreneur. They grow it to another tier that sell to a larger private equity that's in turn sells to a larger private equity. There's no question a significant amount of buyers are a larger fund buying something from a smaller fund. We see that we schedule 80,000 one-on-one meetings a year in ACG through our scheduling software across our various events. And a number of those meetings are private equity meeting with private equity.
Right.
And that's exactly what you're alluding to. Is we have more capital than you, but you got some really interesting companies that when you're ready, we want to be first in line to talk to you.
Yeah. Yeah. And so you see that a lot more going
Yeah,
on,
sure.
especially. Um, yeah. So let's talk about DealMax a little bit. Let's also talk about your leadership of ACG over the past 2.5 years. Let's talk about DealMax. I've been going, very long time since I think my first one was. I'm certainly dating myself, but 1998, 1999, somewhere
Yeah,
around there when it was ACG Intergrowth, and it
yeah,
was
absolutely. Yeah.
and it used to go back and forth from California and Florida or something like that, and then maybe a stopover at one of the you
Yeah, it
know
hopped around quite a bit. Yep.
yeah. And but there were less than, I don't know, 500 people, at that one.
Yep.
So certainly has grown over the years. You get how many people are going to be there? Mostly private equity investment bankers.
Yeah, so we
For those of
expect
you that are not familiar with DealMax, maybe you can give a little bit of an overview of it.
sure, be delighted, and thank you for the opportunity to put in the plug. So DealMax is our our sort of signature event. Some folks call it the Super Bowl, but this year in April, late April in Las Vegas, we're on track to another year of record attendance, something in the neighborhood of 3,400 attendees. One third of that private equity or independent sponsor, family office. One third of that investment bankers, and one third of that M&A partners that support the community, whether those are the accounting firms, law firms, supply chain consultants, executive search, you name it, marketing companies, AI. So about one third, one third, one third. The event basically is 2.5 full days. I mentioned our scheduling tool a little bit earlier, and this always just staggers me when I think about it. But we will schedule 20,000 one-on-one meetings
Wow.
on that property in those 2.5 days. And by my reckoning, that's probably only half the meetings that occur,
Yeah.
because the informal meetings, the number of sponsor parties and events, social events, 40, 50,000 connections between people who have capital, people who have deals, and people that support that whole community. So it's just an amazing thing to watch and see. The energy is incredible. Many folks like you, Roger, have attended for years. So there are relationships that have been formed over decades that are renewed and reinvigorated every year at DealMax. So April 27th through 29th, if you haven't registered, just go find us on the web. It's pretty easy.
Yeah, yeah. And where would they go? To acg.org, right?
Sure,
acg.org.
acg.org or dealmax.org.
Right.
We hope to make it very easy with some very simple words to find the event.
Yeah, and I'm an old timer, so I for whatever reason I still call it the ACG Intergrowth.
Yeah,
So
yeah, you're not alone.
apologize
Yeah,
apologize about that.
yeah,
But yeah, DealMax, highly recommend, especially if you're in the deal business, right? If you're investment banking, boutique firm, private equity, family office. Where do
yeah.
you think the
And
growth?
since you gave
Yeah,
me
go
the
ahead.
opportunity, I'll continue the plug. Across our 60 chapters in 7 countries, we have about 1,500 meetings a year, and every one of those meetings, people build connections and relationships that
Yeah,
lead to the deployment of private capital and the growth of these companies. We have about 25 signature events that grow, 700 to 1,300 people, where thousands of meetings happen. So ACG has a very, very robust system for, as you just put it, for folks who are in the middle market to build their networks, build their connections, build their business.
Yeah, I learned a lot just going to, my local chapter here in New York, ACG New York,
Absolutely. Yep.
meeting the people here in New York, and then they would say, "Hey, you want to go to this one and go to the
Yeah.
integrate, go to the big one," and then
Yeah.
and then it gives you a different perspective, right? Of where all these deals are happening. Well, listen, you've been now the CEO of the Association for Corporate Growth for 2.5 years. Maybe sort of lessons learned. Anything surprised you? Maybe we'll start with lessons learned, and anything that surprised you that you didn't really think was going to happen or know what was going to happen.
Well, it's I'd been a member of ACG now for 25 years and had been very active in ACG, so it wasn't sort of like an outsider stepping in, and but I am always taken by the energy in our events. There's a palpable feel in those rooms, whether it's a 20-person emerging leader group in Charlotte, or 1,000. I just got back from Texas Capital Connection, and just so, again, that energy. And I'd have to do a real shout out to our chapter executives, our chapter boards, our leadership team. Each one of those events are pretty complex to put on,
Yeah.
and what our team does, unabashedly proud to say that, from the user perspective, it's seamless. The badges are there, the meetings are scheduled, the tables are there, the coffee's hot. But we also, every one of those chapters has an engaged board of directors. So we have well over 2,000 people who are volunteering time and energy and talent to make ACG the vibrant organization it is. And Roger, that's what I've been taken about, is the
Yeah.
amazing amount of dedication and the stories of how important ACG has been most any of those firms and members that get engaged. It's how they build their business, they build their network, they build their reputation. And to have an organization where if you give, you get back in a sort of geometric fashion,
Yeah.
that's just it makes my heart pit patter. So.
Yeah. Well, no, that's great. And I highly recommend, especially for our younger people, right? So now we're sort of listen, I'm at the last third of my career. So
Mhm.
part of what we need to do, I think, is to mentor some of our younger people and encourage people to get in the M&A
Yeah,
and deal
absolutely.
making space, right?
From your lips
Encourage.
to my ears,
Yeah.
absolutely. Yes.
And I highly recommend, our young professionals,
Mhm.
sort of, get out of the spreadsheet, get out of out of your desk, off of your day if they'll allow you, right?
Yeah.
Because back in the day, we got pizza at 12 midnight to work on some models and stuff like that. But do go out and join your local chapter, join your local ACG, and start meeting with people, because at some point in your career, after all that modeling, you're
Yes.
gonna have to connect with you're gonna be expected to produce some deals.
Yeah, and if there's been a theme to so many of the panels and content that we've had and all those chapter events, where the people were talking about AI and tools to make everything more efficient, the word that keeps coming up again and again is relationships or connections.
Yeah. Yeah.
And relationships, really, deals happen on relationships. Relationships are the deal, to say that differently. And without that, there is no middle market. There is no deal community. And if there's one thing that ACG will continue to have front and center of our purpose, is to facilitate more relevant connections and help people build those relationships.
Yep. We're gonna close with sort of a little bit of rapid fire questions. And they could be short answers if you want, because you have an interesting seat, being the CEO of ACG and watching all this activity happen, whether it's, it starts with the sort of the one-on-one meetings to, all the way to, seeing the deal happen and get recorded at GF Data, right? So you do see things from, sort of embryo to birth to, to the end of the deal, right? So
Mhm.
cradle to grave, if you will. So, one macro risk, not the war, okay? One macro risk you're watching closely that could, affect the middle market.
Well, that's a really difficult one to answer because there's been a lot of interesting disruption globally. But I think if you take the lens of history, there's always something kind of going on. You go
Yeah.
back to the 1960s or world wars that not all that long ago. So what I try to do with macro risk is put it in perspective and say this too will pass, or
Yep.
this is probably not the sky falling.
Yeah.
Uh, and the more interesting thing is to see uh, how people and how capital adapt and adjust, and
Yeah.
how quickly that is happening now.
Okay. Uh, an under the radar opportunity, something that, people aren't looking at.
Yeah, a good question. Obviously with the amount of capital sitting out there, I think between our private equity members and our private debt members, we're representing over $1 trillion in middle market capital,
Wow.
and they're pretty good at the radar thing and trying to find opportunities. I'm a little remiss that I haven't put the plug in for GF Data,
Yeah.
but GF Data, as many of your listeners would know, we get data from private equity funds and it's highly sortable by NAICS code. But we're launching our AI enhancement at Dealmax for GF Data. And one of the things that that's going to be able to do is to provide query around the NAICS code. Tell me the top 10 NAICS codes in terms of the relationship between equity capital and multiple, or
Oh,
what NAICS codes are getting the most favorable interest rates or the most favorable senior debt structures. We have that in that 20 plus year accumulation of data. And I'm really interested to see that that's going to help find some of that under the radar stuff,
yeah.
find industries that, or what's the greatest inflection point between, a small deal in an industry and a large deal in an industry. Meaning, if you can buy it and grow it, you're going to get even more multiple inflection. It's going to be really interesting to see AI use that tool for GF
So
data
is it
under the radar.
operational? Is it operational now, or
It
is it
is in
still in beta?
beta testing now, and all fingers crossed. We hope to launch that
Okay.
next gen GF data at
Yeah,
Dealmax.
well, we'll report on it. We'd
Okay.
love to see that in action. Um, I know we touched upon this. Maybe a leadership lesson learned over the past few years, or even through your career, that you could potentially share with our younger leaders.
Yeah, I guess two things. I've been very blessed. I've had a somewhat varied career, from a corporate person to boutique investment banker to do what I do now. I've always had a lot of passion for what I do, and I absolutely love what I do now, and so that makes it far less work and much more fulfilling. So find the path in your life where you are fulfilled by what you do,
Hmm.
and boy, it sure makes everything much more enjoyable. And to the theme of many of these questions, and you were real explicit about it, you don't grow a great career by being terrific at spreadsheets. You got to get out and build relationships. ACG in many ways changed my life because of the relationships I built. Not just professional, it was very rewarding, but really the people I've met, the stories I've seen, just the amazing, the gifted people that I've had the privilege to build relationships with has been pretty bluntly life-changing.
Yeah. No, that's great. Is there anything else that I haven't asked you, or if there's one message you want sort of those who in either who are ACG members or thinking about the deal community, any message or takeaway you want people to get?
No, I just really appreciate this opportunity, and Roger, give you a shout out. To provide deal makers recognition, I think is so important, and you and your colleagues have done such a wonderful job of building that, not just for deal makers of the year, but in the turnaround space, in the emerging leader space, in the international space, and to give real recognition for quality work is so important in our industry, and you guys do a wonderful job of that, and it complements everything that we all try to get done.
Yeah, well, I mean, I will tell you, I kind of lifted the idea from ACG 25 years ago, which was basically recognizing
Yeah,
chapters, right? But I
yeah,
said, well, the chapter, that's nice, the volunteer work, which is good. You should do that. But what about the deals? What about the it's hard to do an M&A deal, right? It's
it's
not
really hard.
easy, right? They're really hard. Remember, like when we people put in the and when you see people celebrate, you've been on our turnaround awards
Yeah,
last year.
yeah,
I mean, people real what surprised me, if you ask me, over these last we've been doing it now. This is our 25th year of recognizing M&A deals,
yeah,
Brent. If you can imagine, right? And what always, kind of excites me is when somebody's either, recognized or announced as a winner, because some of our events we don't announce, we just announce finalists and then we announce the winners, just like the Academy Awards.
yeah,
Um, and the, sometimes the elation and the
mhm,
eruption in the room when they're recognized and,
yeah.
and they win. Um, because these, if you ever worked on an M&A, they're not easy.
It's
They are
intense.
not
Yeah,
easy, right? So, but kudos to ACG in, getting the conversations started. Kudos to you, in leading up an amazing organization. And I certainly, M&A Advisor looks forward to, we're huge fans of ACG and DealMax, and look forward to collaborating on many things in the future.
I concur. Great. Enjoyed our time together. Thank you.
We hope today's episode delivered actionable intelligence. We want to hear from the field. Share your questions or insights, leave a message on your favorite platform, or email us at editor@maadvisor.com. To secure your steady feed of premium M&A content, follow us on Spotify, Apple Podcasts, and YouTube, and subscribe to our M&A Alerts email newsletter. Find the links in the description below or visit us directly at our website at www.maadvisor.com. I'm Roger Aguinaldo, founder and CEO of the M&A Advisor. Thank you for being part of the M&A Advisor community. Until next time, stay decisive, stay connected, and happy dealing.